this year, as you're all aware, is larger than ever with 11 coalition partners that have come together to scout for startups across India. And we, of course, have all shortlisted participants get access to Artha Impact's network of 1,200 impact investors and incubators. And not just that, we have a total pot size of 5 million USD up for grabs this year. So without further ado, I'm going to invite Eva to talk about the investment thesis of Beyond Capital Fund. What are the kind of startups that they're looking to support through iPitch? And with this session, please, you can ask any questions that you have. You can type in your questions into the chat box, and the first 10 minutes of the session, Eva is going to quickly go through her investment thesis, followed by 20 minutes of Q&A. Over to you, Eva.
Thank you, Akshata. I did want to ask, should I share a presentation or should...
Sure, please go ahead.
Great to see everybody. Thank you so much for being here to ask me anything. How fun is that? I hope I get some really great questions from all of you. But first, I'll tell you a little bit about what we do at Beyond Capital Ventures. And I believe we've been a partner with iPitch officially for 2 years, but I think we've been maybe an unofficial partner, of course, with Villgro, and then of course with Artha for many, many, many years. One of our first investments in India was a co-investment with Artha. So just to state that, and thank you to the Villgro team. You work tirelessly, you are passion-driven, you are purpose-driven, and that's why we're all here. So I'm gonna share my screen, and I'm gonna run you through a brief presentation about Beyond Capital Ventures. So essentially what we're doing is investing in conscious leaders, which may sound interesting and different to you, but what we're defining conscious leaders as is leaders who are thinking about all stakeholders, leaders who are truly going beyond the paradigm of business and just shareholder primacy. And that's very important in our investment process, is to understand who the leaders are and how they're driving the impact. What we are, and this is an investor-facing pitch, so it does have an element of explaining what we're doing in the lens of what investors are looking for. But essentially, what we are is a women-led emerging markets impact venture capital firm with over a decade of a track record. When I say emerging markets, we also invest in 3 other countries in Africa. My family lived in Africa decades ago. Started a hospital in Tanzania, and I was deeply inspired by the use of my grandfather's skills as a medical doctor to implement impact. So when I worked on Wall Street, I thought, why can't I use my skills to become an impact investor? And this was in 2009, and pivoted to start Beyond Capital Ventures' first fund, which is, and I'll tell you more about the results, but that is where we've been investing in India for about a decade. Our first fund has a return profile of about 2.2 times. I think we have expectations to go beyond this for our current fund, but just to share the details of the first fund. More importantly, and these numbers actually have been updated, apologies. I had actually for me, it's 7:30 in the morning, and I've had a prior call, so I didn't get a chance to fully update this for you all to have the short form of the presentation, but we've reached 20 million people. Including 16 million women in our portfolio, and our livelihoods number has also increased. But every company we've invested in the past has addressed at least 2 sustainable development goals. If you are tracking those in your business, I think it's really important to articulate that, to share kind of the inside and the nuts and bolts. I actually just discussed a business in India on my investment team weekly call where there could have been a better explanation of both the social and the environmental impact versus just the environmental impact. So I encourage you to think about that. This will help illuminate our investment thesis a little bit more. Again, we're focused on conscious leaders, but we're also focused on need to have. So healthcare, financial inclusion, as well as agriculture. And we do look at waste and sanitation and energy access occasionally, but healthcare financial inclusion, and agriculture are our three main sectors. Our three main impact verticals are gender, distribution, and livelihoods. And this is how we create a diversified portfolio. So for us, we're not an investor where we say we are an ag investor. We go very, very deep into that particular sector in one particular country or region. It's really about investing in the people who are running companies that are providing access to our three main areas. We are actually in the process of raising a $30 million fund, but we do have $5.3 million of capital available. We will invest in 21 companies. You being on the company side may not know this, but it does take us the review of thousands of businesses to narrow down to about 21 companies. So we always aim to be respectful with entrepreneurs' time, but we do talk about a lot of businesses that we possibly will never invest in. We also anticipate that taking our impact number to scale, we will reach over 600 million lives with our fund. So you can see that we have a focus on the social impact side over the environmental impact side, and a disproportionate impact on women, employees, and consumers. We're really focused on females across the value chain, and not just only women founders or only women as consumers. We're really focused on just helping promote gender across portfolios. I've mentioned our deal flow, and also we do believe that impact and financial returns can exist hand in hand. And if you do too, I encourage you to explain that in your businesses very, very clearly. So why we invest in these areas is because we really believe in them. Both India and East Africa are among the top 4 emerging markets destinations around the globe. So this may be framing that you don't hear so often, but this is a really powerful message for our potential investors. And one other thing I would say is it's a tricky time to invest in emerging markets because a lot of the large banks have funds and products, but it includes countries where there are a very high share of human rights abuses, such as Saudi Arabia. It's a political statement, but I think definitely true, as well as Egypt and even Russia. And so I think that investing in companies like yours is the best way to have your cake and eat it too when it comes to impact and returns in emerging markets. Oh, I think I need to reshare. Hold on one second. Okay, we're going to reshare this. Okay, there we go. So this is our team. This is the way we look at gender, but I'm telling you this because it may be interesting for you and your companies. Again, our impact themes are gender, distribution, and livelihoods. We look at gender at the fund level and the investment committee level of the fund. So we have a majority female investment committee. We look at gender in the company leadership. There's Ajita Shah. She is one of the portfolio company CEOs of one of our first investments. That is the investment we made with Artha in 2013 called Frontier Markets. And so 63% of our current portfolio companies have a female founder, but 100% of them have women in senior management roles. I know there is a paradigm of 3 guys starting companies across the Indian subcontinent. That's great, but please understand that your country has tremendous female talent that also deserves, and frankly, from a business perspective, I think should be included in those businesses. And that is really important to us as an investor. And then finally, the female consumer, she has strong needs, and frankly is the one often making purchasing decisions in the households if we're talking about low income consumers. This is our team. There's more to our team, but this is kind of a quick version. While I do sit in Dallas, Texas, 70% of our team members are physically located in the markets where we invest. We will also be hiring a senior investment associate in Bangalore, probably towards the end of this year, and then making a hire in Nairobi and another hire that splits their time between geographies to help manage the portfolio. I'll skip where we have what we have already raised. Somehow my computer is, and I'll say thank you to all of you, but just maybe to round out some things that I haven't said, because I think I maybe have one more minute here. We are a seed funder at our core. That is really why we do the work we do, because we really enjoy the seed funding aspect of our work, the ability to catalyze companies like yours. And so we understand what it's like to talk to companies in their early stages, but we also really love that part of our work. And we also do Series A. Our check sizes are between 250 and 700,000 in seed, and then 400,000 and 1.1 million in Series A. So let me stop there. I think I see some questions. Should I start rolling into the questions?
Sure, Eva, if that's about it, happy to open it up for questions. Great. Rohan, would you like to maybe start?
Sure. Yeah. Thank you so much for that, Eva. So we have a couple of questions. We'll go with the people who've raised their hands first. Shashank, please unmute yourself and ask your question.
Thanks, Rohan, for that, and a very interesting presentation. I had two questions primarily. One is on the team side, the leadership does not have a woman leader as of yet. There are a couple of candidates, but if the majority of the engineering team is women-led, is that fine? Do you look at that? That's one. The second question.
Go ahead, please.
The second question is around the kind of successful, maybe one or two case studies, if you could give, preferably in companies that are not particularly focused on direct to customer, but B2B and B2C combination that you've invested in. That would be really helpful.
Okay. So on the gender side, yes. We personally are fine with management teams. We like it to be management teams. We're fine with high proportions of females that are not the actual founders, the promoters. So we're okay with that. And that's because we understand that men can have impact too. And I think that, that's important, an important paradigm to allow for male promoters to express their own views on equality and gender equality by hiring more women. And I haven't really seen any kind of tension across our portfolio. I think our male founders, particularly in India, are pretty much, happy to bring a woman into a role if there's a, qualified candidate. I think the challenge is, particularly when you get into tier 2, tier 3 cities, is very hard to find sometimes qualified. I don't say it's hard to find qualified women. It's hard to find women who are willing to stay in particular roles. So that's a separate conversation. With regard to the B2B to B2C mix, it's a tricky question that you ask, because I think it really, number one, depends on the company. Sometimes we look at these kind of customer mix or business model mixes as trying to validate a part of a business that maybe just needs to be validated by having really strong performance in the other area. And so, for example, at 45 minutes ago, I talked about a B2B, B2C, and B2G business in the waste space in India with my team. And I think our thinking around particularly the B2B part was that it actually might have been a little bit less authentic, but because there was some lower hanging fruit in that part of the business, the founder decided to take it on. And it also looked really good for the company. Whereas the B2C part was actually where there probably was more impact. And of course there's potential for return, but the margins were roughly the same, but there was potential for more impact. And so I think it really just comes down to how you're explaining it. We also have a company in our portfolio called Red Wing Labs. It's a drone healthcare delivery business. And they are a B2B and B2G company. And speaking very honestly to all of you, we do view B2G as a slight risk. While there can be regulatory tailwinds, there can be regulatory headwinds, and we have seen the wind blow in different directions quite severely, especially in my investment lifetime in India. We've had obviously demonetization, and then we had COVID lockdown with 24-hour notice. Both of those things happen. So I think that we just want to make sure, we would not invest in a B2G entirely, but we want to make sure that they are having a healthy mix, if that would be included.
So if I could just clarify, it's particularly focusing around the business and how the business is structured, not necessarily looking at the robustness of the business as a whole, but not necessarily, there are no red flags particularly.
I missed that last bit. If you could just repeat, please.
Yes, I was actually saying that, so if I could summarize it in a gist, it could be B2B or B2C in a combination. So you're looking at the business as a whole, not necessarily there are any particular red flags if it's either or a hybrid.
I mean, yes, I think we're looking at everything. And I know that's a challenging answer, but it's true. I mean, I think Investia, thank you for the thumbs up. The investors are looking at the whole picture, but they're also looking from different angles.
Thank you. Thank you for the answer.
I hope that answers your questions, Shashank. We'll go to the next question in the chat box. The person wants to know if the funding instrument is only limited to equity, or does Beyond Capital Fund also delve into grants?
We do not do grants, nor do we invest debt. So in India, in particular, debt is a restricted instrument for us, and so we are primarily an equity investor. The reason we don't do grants, even though our first fund was set up as a nonprofit, our second fund is not a nonprofit, so it's not really something that we can do. We provide capital back to our limited partners. But in our first fund, the reason is that we really do believe that there's a need for sustainability, and equity helps provide that. I understand the blended capital approaches. I understand that there's a need to test and pilot, but for us, I think it's been really important to be able to have a return of capital, also to help be a part of a movement that says this is possible. You can have a return on a company, real life example, in Assam, providing access to eye care for 300,000 plus people. You can double your money on that business. And we need more of that. And that's, I know by being somebody who's raising money at the moment for my fund, nonprofit first fund, for-profit second fund, people step up with larger checks when it comes to for-profit as well. And so I think there's an ethos that's important. Now, there are some great grant funders out there. It's just not us, unfortunately.
Thank you so much for that, Eva. So there are a couple of people who raised their hands. Harita Singh, you can unmute yourself and ask your question.
Sure. Thanks, Rohan. Hi, Eva. I'm Harita over here. I'm the founder of Goodly, which is basically a for-profit social impact startup which works with artisans to create unique handcrafted products. We already have like around 45 plus artisans on board with us, and we have already, got some initial traction and revenues. So I wanted to know whether something like this does interest you, and if so, is there any minimum revenues that you're looking at to invest in?
Yeah, I mean, we do have an investment in a company called Lal10. So just from your description, I'm sure there's much more nuance to your company. We do have an interest in this space. That I would say it was. I would say I'm not sure it's a perfect fit for us where our priorities are right now, but your website is beautiful, and I think that there's a tremendous interest in this market, especially in creating greater share of work for artisans in India. What I would say about revenues, though, is we're really looking for companies that have, and I'm going to use dollars, apologies, because that's just where my brain thinks, that have a minimum of about $200,000 in revenue at what we would call kind of very early seed stage, probably pre-seed. Many of you are probably shaking your heads and being like, that's super easy, because pretty much every company we look at in India has much higher revenue than that. So for example, the waste business we discussed this morning had about 500K. We are currently looking at a seed round for a business with $14 million in revenue in the ag space in India. But for us, there has to be some kind of level of revenue. And part of that is also ensuring that our stake will allow for the capital that we're putting in will allow for a stake and a visibility in a company that I think is more meaningful. So it's not just about stage, it's also about where we think that company can go based on their results, revenue multiple of potentially a valuation, and then how that valuation plays into the amount that we're investing and we would ultimately own in the company. Because we do want to have about an 8 to 22% ownership over the time that we're investing in seed and Series A.
Okay, that pretty much answers my question, Eva. Thanks, thank you.
By the way, whoever asked about ag supply, Srini M, with grower and customer as core, yes, we do look at that. Just FYI. Sorry to go off script, Rohan.
Perfectly fine. Thank you so much, Eva. Amit, you can go ahead and ask your question.
Yeah, hi. I'll yield to Clementine, who's also from my team, and she raised a hand before me. So Clementine, go ahead.
Thanks, Amit. Hi, Eva. Sorry, I missed the first few minutes of your presentation, so apologies if I asked something that you've already covered. I had a couple of quick, more practical questions about the fund. One was about the ticket size. So I think you said your ticket size is typically upwards from 250K, but would you consider smaller ticket sizes? Let's say there's already a larger lead investor. Would you consider investments down to around 100K, 150K range as well, or is that a strict criterion on your side?
It really depends. And it would have to be an exception for us. The reason is, in order to manage a portfolio of 21 investments in the way that we keep relationships with our founders, which is very collaborative, very high touch, we really do have to stick to about a portfolio of 21 companies. And my investment experience has taught me that no matter whether there's a lead investor that you kind of know of or not, really you drive the outcome as the investor of your investments. And so we do have to have the ability to remain close. And so that's the area where it gets a little bit tricky. I think we in the past we've wanted to pilot $100,000 investments, but it also requires us to invest in companies occasionally that are quite earlier stage. And that was actually not comfortable. But if it were coming into a round that we thought was highly strategic, or maybe we could get a space in the Series A for, that could work.
Okay, got it. Thank you. And from what you said, so does that mean you guys are always taking a board seat, or what's your position on that?
No, I mean, if we're leading the round, we would like to have an observer or a board seat. But for example, in an ag business that we're currently looking at, we think that there should be another credible lead, and therefore we are not leading that round. We won't have a board seat.
Okay, got it. And last question from me. What does your due diligence process typically look like? Do you do site visits, or what happens in the due diligence process, and how long does it take?
Yeah, I mean, just a point on the board, just to make a note on that board seat question. The board seat does not need to be the anchor for a personal relationship with your investors. I would encourage you to get to know your investors as much as they get to know you. And for us, I mean, it doesn't have to be as formalized as that. and I could go on, but I'm aware of time here. When it comes to due diligence, our process is 6-step. Of course, we get to know the founders, the promoters. Of course, we spend time where that company is operating before we invest. I don't think that this is work that can be done, remotely. I think it's really important in the relationship development and the trust and the respect that is being built in a due diligence process. But then we do all the very traditional venture things. We take models apart, we put them back together, we discount projections, we do kind of base case, downside case, et cetera. There's a lot that we do that just goes deep into the company. We do if we're leading, we do a full stack legal DD. We do a lot of conversations around structuring, terms. I would say we do a very extensive due diligence, and we view that as something that can also be helpful to companies that are getting ready to grow their companies to this point where they're raising next follow-on rounds.
Got it. And I know this is a bit of a how long is a piece of string question, but how long does that process typically take from end to end?
It really depends. It can take anywhere between I'm so sorry, my son walked into the room. I'm just going to give him a hug. No, okay, he's leaving for school. Apologies. It can take anywhere between 2 months, and it has taken up to 6 months, but a lot of that is compliance in the investment process. So like we will commit to the investment, and then the promoters will start going through that legal and compliance process, and that takes another 2 months to get everything in line that they need for the regulatory filing for our investment.
Got it. Thank you so much, for answering all the questions.
Thank you so much, Eva. Moving on to the next question. There's a question by Tamal who asks that if Beyond Capital Fund has any criteria for revenue generation. They say that they have a revenue of around 20k euros in the health tech sector, serving one of the biggest corporates in India. So do you think that you could pitch in here for seed funding?
I mean, we do like to see a minimum revenue. If you're saying $20,000 per month, that's probably more interesting to me than an annualized revenue of 20,000. Because what that number, it's not just a hard and fast number. What that number is telling me is, great, you have one customer in the healthcare space, but that's also something we would consider. Okay, yes, this company has revenue. Yes, they have a well-known customer, but can this business grow beyond just that customer? We actually decided not to move forward with an East African healthcare business very recently because they had one hospital client, and they were telling us they could scale across the continent, but we weren't able to really see it in their early mix of clients. And so while you could argue that they needed money to do that, I think their offering and where they had been able to get the business was strong enough so that they should have had maybe some more diversification. Our first investment was in a company called Villgro Medical. It's a business with 500 customers, and no customer represents over 8% of the revenue. This kind of bulks the Pareto principle, which says like 80% of your revenues are coming from 20% of your customers. But it definitely gave us assurance that we were investing in a business that was somewhat de-risked from concentration of customers. So just something to note. I mean, but healthcare is my favorite category of our investments. So I'm always open to hearing about healthcare innovations. And I think particularly in India, it's possibly one of our 3 focus areas that is not a little bit overheated. And we're very aware of market dynamics when we allocate.
Thank you so much for that, Eva. I know that we are on the 6:30 mark. Would you be open to taking some questions, if that's fine with
I
you?
can take one more, but I have
Sure.
to speak to Supply Chain Labs.
Sure. Okay, we'll take the last
in a minute or two.
Yeah, thank you so much. We'll take the last question. It's by Vishpala. They want to know if a hybrid company can structure as a red flag. For example, hybrid company structure can come across as a red flag, basically a combination of for-profit and not for-profit.
It's not my preferred structure, but I think it's doable. I think if the founder and promoters are able to explain why they have the nonprofit and how it is useful, and how it is not over subsidizing operations of the business, or diverting attention from the business, then it is reasonable. But I have really not seen it be, I've seen it go both ways. And the extreme case is that it does actually create a business that cannot grow and scale because it is truly not profitable being subsidized.
Yeah.
I can do one more.
Okay, Mohammed, you can unmute yourself and ask a question.
Okay, so sir, my question is that key right now I'm on a stage that I'm preparing for patent, and suppose that if in upcoming a couple of months I get patent for my product, should I get the fund for start from zero after holding the patent right? Can I get a fund from starting zero?
If you get a patent, can you get funding? I think that's how I understand your question. Is that right?
Yes.
Okay. I would say there needs to be much more around a patent. At least, I mean, for me, there are a lot of investors that are interested in, investing in that. And I'm sure you can find them, but I think there needs to be much more vision, story, mission, particularly if you're impact driven, around the patent business model, just the really true ability to explain what you're doing. That's what we're looking for. We're looking for founders that explain their ideas well. If I were to boil this down to kind of one key point, it's tell us what you do, but tell us what you do in a really impressive way, and it will open the door to future conversations. Now, if there's nothing underneath that, we've talked about revenue a lot today on this call, then we're not able to move forward. But I think that there needs to probably be more of a business model spun around a patent. I'm going to say thank you so much. I'm sorry I have another call and they've been waiting 3 minutes for me. Thank you, everybody, and have a great evening, and looking forward to potentially interacting with some of you through the iPitch
Thank you
program.
so much, Eva. Thank you for taking the time to do this.
My pleasure. Have a
Thank
great
you,
evening.
Artha.
Bye, everyone. Take care.
Bye-bye.